Hello, ladies and gentlemen. This is lesson 2 in our course, Snapper Entry Crash Course, June 2026. In our previous class, I showed you how to identify swing points in the market. Then I also showed you how to identify external highs and internal lows, external highs, external lows, external highs, external lows, internal highs, internal lows. I showed you how to identify them. Right? That's what I did. So right now I want to go deeper in our study of market structure. We are still studying market structure, and today we'll be talking about breakup structure, and then also displacement, and then let's see where we can stop. So let's go to the chart. Okay, break of market structure. So the first thing I want to discuss is the concept of displacement. So displacement, they used to tell us, is speed times time. Speed times time. That one na physics. Make I talk chart thing. Displacement is an energetic thrust, an energetic push above an old high or an old low. Yes, so as I was saying, displacement is an energetic push. You see a big body candle or a candle body pushing through an old high or an old low, leading to a breakup structure. Now that thing that they call displacement. So let me avoid English. Let me show you. Okay, so look at it. So we have this breakup structure here. Let me be using my horizontal line. So you see candle body closing below that old low. That is displacement. This is what we call a break of market structure, BOS. Some people can call it BMS, break of market structure. Are you following me? Okay, so look at this one. Do we have displacement? Yes. We see that price broke below this low with the body of a candle closing through that old low. So there's displacement. How about this one? Okay, look at this one. A serious power move below the old low. It just be like, see, they throw an elephant into a swimming pool. Anybody where did that area go know say elephant don't land inside swimming pool. It will be very obvious. No, it's not something you are trying to see if it's valid or not. No, it's very obvious. So this is what we call break of market structure. So before you can have a valid breakup structure, there ought to be an energetic candle closing below an old low and old high. So that's what we call break of market structure. So I think I'll just do So another thing, I'm trying to see if I can get like a bullish example, a bullish example. Yeah, of course. Okay, look at here. You know, the thing there is that you know your normal higher, low. It's part of the first assignment I gave you. Go and study trend though. Because, like, if I put this line here now, you already know we have a break of structure. There's an energetic push below that low. There is a break of structure. Okay, look at here. There is a break of structure. An energetic body of when the body of a candle close above a node low and node high, that is what we are seeing. It's not in English. How about up here? There is a break of structure. Here. There is a break of structure. Body of the candle don't close above that place. See? So this is the concept of break of structure and displacement. So we covered it extensively in our second class. So this is lesson 2. Okay, this is lesson 2, and I should have ended the video now, but in order for me to give you some little bonus, just little bonus, okay, so this is a high, a low, a high, a low, a high, a low, a. So this is a textbook example of an uptrend. You have a low, a low, a low, a low. So all these ones are called higher lows. These are higher highs. Higher highs. Notice that this one is higher than this. This one is higher than this. That is how you know an uptrend. Price must put up series of higher highs. High where they class 2. Suppose they higher than the one where they class 1. That's what it did. That's how you know an uptrend. So why am I saying so? If I put my line here, for example, so you already know that here is a high, here is a higher high. And if I put my line on this one, so you already know that these two highs, they are basically equal. So this is a high, so you cannot call this a higher high. You should rather say relatively equal highs. Where do we have a higher high? Here. That's where we had a higher high. So where is our next higher high? So now this is the thing. You might check this thing now. We now have a higher high. Where do we have the next higher high? It's up here. So every high where they are internal highs until we trade above this line, this external high. This is it. And everything here is an external low. All these ones become internal lows. Now where we will get a new external low now when we trade below here. That's it. So understand the concept of displacement and understand the concept of break of market structure. All right. There's something I need to explain, even though I have not taught you. It's what we'll be doing next. Maybe I should just mention it. All right. Look at this break of structure. Okay, this break of structure is very special. Why? Because you can see price was able to break the last external high, and when we broke below that, you already know that we're in a downtrend. We're in a downtrend. That is how you know the trend has changed. So I will not trouble you now, but some of you may have seen this thing. This is called change of character. The first indication of a reversal, change of character. So in our next class, it's part of what we're going to be discussing. So I'll just go back to this break of structure thing and show you some scenarios that doesn't really depict a break of market structure. Okay, I know what to do. Let us trace a very long trend, then I'll be able to explain. Something like this one here. Let me trace this one down. Be able to, at least we'll find one example. Okay, so look at it. What we want to identify is break of structure. So we have that low. Notice that here it didn't even touch the line, talk more of breaking it. Where do we have a break of structure? Right on this candle. That's where we have candle body closing below that low, right? So please understand what we are doing. Understand what we are doing. All right, so if I move lower, if you look here, there's really nothing serious going on. And even if you said, okay, this is a low, and you can see we have a good break of structure there, but it just one or two candles packed together. So now, so this is the low, and also remember I've been telling you this low is called external range liquidity. So you already know that. When we get to that, I'll explain again. Alright, so look at this. You know we have a valid break of structure here, because you can see candle body closing below that old low. Okay, so let's move our horizontal line to this low now. Now, where do we have a valid break of structure? Not on that candle, not on that indecision candle. It's on the next indecision candle that we have our break of structure. And then listen carefully now. So if this is an external low and this is an external low, what will you call these ones? The internal, and you can see there's no valid break of structure with all these wicks. Nothing. Even if they close below this line, so long as it's not with a body, it's not valid. So thank God. You see this low. You look at this low. So we have a liquidity sweep here. Look at. So is that a valid break of structure? No, there's no body closure. This is where we have a valid break of structure. That's why we have a valid break of structure. Are you there? So like that. Then I go down. Here, where do we have a valid break of structure? Here. So we have a valid break of structure. Not on the bullish candle, but on that red candle. This one. So now then we establish a new low. Okay, there. Where do we have a valid break of structure? Here. Valid break of structure. The internal lows. So you see. So because this is an internal low, internal break of structure. So as we go on, I'll teach you how to use them. Don't be confused. So you can follow this thing all the way down. Alright, where I will close this class is to discuss fair value gaps. Fair value gaps. So fair value gaps is one among the 7 institutional reference points. The 7 PDRs. The 7 institutional reference points. The 7 PDRs. It's about to rain here. It's about raining, and I just pray it doesn't interrupt me. So I said, this boy, this boy must disturb. Okay, 7 PDRs, institutional reference points, institutional key levels. There are 7 of them. I say go and study the 7 of them, but I will teach you 2. I'll teach you fair value gap, and I'll teach you order block. If you know these 2, your problem don't solve. So the one I want to discuss now is fair value gap, and I repeat, they are key levels. And when I say they are key levels, it means that they act as support and resistance zones. Don't forget what I'm saying. No, I no put water for mouth. I said fair value gaps and order block. They act as support and resistance zones. Go, get out. Okay, sorry for the distraction. So fair value gap. All right. The first thing is, before I say anything about a fair value gap, I just want to show you how to identify it first. Okay. So aggressive price movement. Look at it. See price. You see, this one is called an efficient price delivery. This one, this consolidation is an efficient price delivery. Then you see a sharp move, or what you call a breakout, And if the breakout is actually, if you have a fair value gap in the breakout, okay, no, wait, first of all, let me show you how to identify it before I do applications. So it is a 3 candle pattern, and fair value gap is a 3 candlestick pattern. The candlesticks must be consecutive. It doesn't have to be one here, one. It doesn't have to be one here, then one here, then one here. That's no. They must follow each other. 1, 2, 3. Yes, 1, 2, 3. They must follow each other consecutive. Right? That's the first thing. So it's a 3 candlestick pattern. Look at the way I'm drawing it like this. It's like this. 3. Now, must the candle be of the same color? No. Color doesn't matter here. The candlesticks must not be the same color. Yes. So, what you are looking at is candle number 1, candle number 3, if you are in a bullish trend. And if you are in a bearish trend, going down, is candle number 1, number 2, number 3. Now, you see the way I'm counting. Bullish is you are counting from down to up. Bearish, you are counting from up to down. Okay. Like I told you before, I like making this kind of videos in the night, so there will be no disturbance. Everybody is asleep. See. Now, candle number 1, candle number 3. You check for the wick of this one and the wick of this one. So the upper shadow here and the lower shadow of this, if they do not overlap, if they do not meet, if they do not trade into each other, then the space between them is what we call a fair value gap. Okay, So let me quickly rush through them. So this is a bullish trend. So if you see here, we have candle 1, 2, 3. You can see the wick of the third candle and the wick of the first candle. They are not touching. They are not overlapping. They are not touching each other. So this space is what we call a fair value gap. So it means that the bulls got 100% opportunity for them to express themselves. And the gap, and this gap that we are seeing now is proof that price has been inefficiently delivered, right? So it's not favoring the BS, you see, and the first market is not designed like that. It's not designed like that. It's designed that bulls and bears have equal opportunity to participate in the market. But in this case, this sharp movement, right, leaving the bears behind, it just be like Ojoro. It just be like the bulls just did Ojoro. See? So the price is not balanced. It's not balanced. It has been inefficiently delivered. So I told you that another name for fair value gap is imbalance or inefficiency. Fair value gap, imbalance, inefficiency. You're saying the same thing. So if I mark that FVG, can you see price actually tried to come and at least tried to come and a kind of rebalance it, but nothing. So you see, that's a fair value gap. Okay, and here we have this 1, 2, 3 candle. Look at the wick of the first one and the wick of the third one. So the upper wick of this one and the lower wick of this one, they are not touching, they are not overlapping, they are not trading into each other. So you mark this space as your fair value gap. Now this fair value gap thing I'm saying, you can see that the one we identify here is bigger than this one. So you see, so it's not that all of them are going to be the same. All of them won't be the same. How about this one? Number 1, number 2, number 3. See the upper shadow here and the lower shadow here. They are not overlapping. They do not meet. They do not trade into each other. So that's a fair value gap. Look at this one. 1, 2, 3. Upper shadow, lower shadow. They do not meet. So you draw it shadow to shadow. Go and practice this thing. Then I said, this kind of fair value gap, this one is called a BC, buy side imbalance. It means that the inefficiency is fine. It means that the fair value gap is on the bullish trend. Buy side inefficiency. Buy side inefficiency. BC, buy side inefficiency. Sorry, buy side imbalance, sell side inefficiency. Buy side imbalance, sell side inefficiency. You see that? You see that? BC, buy side on the buy side. This is the buy side. This is sell side. Any fair value that formed on the buy side is called buy side imbalance, and the sell side is inefficient. See, the sell side is inefficient. I don't know if it has been balanced later. Can you see? Price has not traded back into that fair value gap even up till now. And there's a special name for this kind of fair value gap. I don't need to bother you. So let's see a sell side. Oh, it's raining. Oh, I'll stop here.